Hi everyone. In today's video, we are going to be talking about donation tax rules and how they play a key role in overall financial plan. This topic is very close to my heart. I think so. In my personal view, I think we all have responsibility towards the society, and the donation tax planning can do more for the causes we believe in. So let's get started. The one of the very big question which I always come across that people ask that are we should donate personally or individually or corporately if the person is have a business incorporated. So we are going to first talk about individual tax rules on donation, and then we will go towards corporate tax rule towards donation. If we look at a individual tax rule, when you donate to your favorite charity or the call charity you believe in, you will get a non-refundable tax credit, and that tax credit will reduce the tax payable. So it's not a deduction, it's a tax credit. So as this tax credit, it has also it is a, there is a very important planning point to consider: the zero inclusion rate on a capital gain on certain donations in kind, like publicly traded securities, share of a mutual fund, a corporate and unit trust, or ecological sensitive land. So what that mean, that if you have a stock which you bought it for 100,000 and the current market value is 200,000, you can donate that stock in kind to the charity. Now your charitable donation is 200,000, but the 100,000 capital gain will not be declared. One thing we have to keep it in mind that in starting to 2024, the alternative minimum tax consideration has to be considered, and that thing is beyond the scope of this presentation. But alternative minimum tax, something has to be considered when you're making an in-kind donation to a charitable donation in starting in 2024. Now, as we came to this conclusion, that is a non-refundable tax credit. So when we are looking at it in 2023, a federal and provincial tax credit, if you first $200 of donation will get you 25.5. Anything above $200 you will have 43.5, and if the income excess of 235 $675, the rate will increase to anything above that to 47.5. So that's the tax rates. So, but the one thing we have to understand, that the maximum donation is eligible for tax credit in any given year is 75% of your net income. So what that mean? So if your income in the year is 100,000, you can use $75,000 worth of a tax credit in that year. Any access donation or credit can be used 5 years can forward in following 5 years. So it is not a loss. So now one of the other thing we have to look at it is a tax donation at death. The tax donation at death is a very big tax planning strategy which can be used. So in the year of death, the maximum eligible tax credit is 100% of the net income, both in the year of death, immediately year preceding year. So what that mean, that if you have a $100,000 net income in the year of death, you can use 100,000 worth of a tax credit in that year, and the tax rates are the same which are was in the previous slide. Now, as we fall going further on the tax planning and donation planning at death, the gift made through the will, beneficiary designation, a state donation is considered made by the state. If the gift made in 60 month of the owner, the tax credit owner, the 60 month of the owner's death, the tax credit may be claimed by deceased in the last two tax years, in a graduated rate estate in a current and previous year. So if the estate is GAR, you can in the current year and previous year. Even if the state is no longer graduated rate estate, the allocation noted above can still be made as long as the donation is made within 60 months following the date of death of the individual. So that's something to consider. Now we are moving on to the corporate donation. When you donate to the charity, you that is a not tax credit as you do it individually. It is a tax deduction, and it reduces your taxable income for the corporation. So, as indicated earlier, it's a tax deduction, and that tax deduction can be used up to 75% net income for tax purpose, and it can also be carried forward for 5 years. Now, as to coming back to the earlier question that it is beneficial to donate personally or corporately, that is very circumstances specific to the individual. So either it is beneficial to donate corporately or personally. So that, I think so, that cannot be a generally given advice. It is very specific to the person. And I strongly recommend you to seek your tax professional advice to determine what is the optimum path. That's it for today's video. If you enjoyed the watching and having any friends or colleagues or family member you think might get good use out of it, please forward it on. If you have any question related on this topic, please feel free to reach out to you and I will be happy to assist. You have a wonderful day. Thank you very much for your time and I will see you next time. Thank you. Bye.